Everybody, welcome to Deep Practice for October 10th, 2019. It's October already. My goodness, time goes by quickly. We've got a member question tonight for the agenda, and then everything else will be basically the same, tracking the cable, a little bit of deep practice, and then we'll take a look at current markets. And we'll continue to use the Weiss wave with deep practice here. So a member sent in a question actually this morning or yesterday. I saw it, so I thought I'd try to address it. He said, referring to David Weiss's newsletter, I'm not sure what he meant about the widening price range and how to use it as a trading strategy. So in David's newsletter from, I think this was from last night, he's using the hourly bar like we do, and he says here the hourly bar chart shows one of the best strategies for trading the S&Ps. It centers around the areas where prices rise or fall with widening price ranges. I'll explain what that means in a second. These ranges are often tested and sometimes retested and can be used for counter trend trades. And he labels the important ones here. Okay, so let's see what that means. What does he mean by, sorry, I'm trying to get a pen here. What's he mean by widening price ranges? Well, another way to refer to this would be vertical acceleration areas. Vertical acceleration areas. I'm not going to try to write it out. But the idea being that when the market goes vertical, like here it goes vertical, and it's on widespread, he calls widening price ranges, but the range of a price bar, here's a price bar, right? The range is the distance from the high to the low, or the low to the high. This is the range, or sometimes we call it spread, right? It's the range or the spread. So these get wider, they get larger. And you can see that in here, it's all fairly narrow, and then suddenly it gets wide range bars, right? Well, it comes back and tests. And we want to see it testing on low volume, narrow range kind of thing. Here it's testing not really the vertical acceleration. That would be, in my judgment, a little bit, I mean, it is a test certainly of this, and you can see that the vertical acceleration ended, I guess, up in here somewhere. Typically, we like to see it go in a little deeper, but that's fine. That's one of them, okay? So let's take a look at some other ones. Well, here, he's got an arrow here. What does this mean? Well, the vertical acceleration is down here. We have an up thrust, right? And we get vertical acceleration. We like to see volume come in on the vertical acceleration. We see it come in here to the upside, right? Looks good there. And then it comes in here to the downside. And then what we look for is a test of that. And here it comes right back into the center of the vertical acceleration, right? This is vertical acceleration to the downside. Vertical acceleration down, vertical acceleration up. Okay, that's the way to think about it. So now we come down, we get vertical acceleration down here, and the increasing price, and we come back up and test it in here. And here we're testing along this line as well. But the idea being that when you get vertical acceleration, that's momentum. That's like, you can think about it as like new momentum, right? New momentum into the market. It typically gets follow through, but we want to wait until it comes back up to test a little bit here, right? Peter says, I notice, Brian says vertical acceleration area is good. Peter says, I noticed that practically all your charts, you only use the Weiss wave on the 5-minute time frame. Any higher than that than you use regular volume histogram. Is there any reason for that? Yes. You find that the waves on the higher time frame not as useful? No, not at all. They're quite useful on the higher time frames as well. You'd have to adjust. Like this is, he's got 1 point for an hour for a 60-minute bar, If you go up to a daily chart, you might go, I mean, I'd probably go 3 to 5 points on that. A weekly bar might be somewhere between, weekly and monthly might be somewhere between 10 and 15 points. Is that right? Yeah, on the S&Ps. These are big in here. So yeah, you could certainly do that. Is there a reason that I don't use it? Yeah, because I want you to be able to read both regular volume and the Weiss wave. So I use the Weiss wave on the smaller time frames. On the larger time frames from the hourly up, which for us it's just the hourly and the daily, then I'm using the regular volume. And actually, in my personal trading, that's how I tend to do it, or that's how I do it. Generally, I don't like the Weiss wave on the larger time frames because it's got to turn before it really, well, I shouldn't say that. It's fine on the larger time frames, but I still like the volume on the bigger time frames, the regular price bar. That's just my personal preference. But you certainly can use the Weiss wave. You just have to adjust it. Okay, so now we come back down here and he's got another arrow. Why is this arrow? Well, he's saying that we're testing this area in here. Okay, and then we have another vertical acceleration area up here, and it gets tested in here. Okay, so really what we're looking for, vertical acceleration is, you could use it as sort of a signal of momentum, right? New momentum. And if new momentum is coming in, what we see with new momentum always is going to be wide spreads, wide ranges on the price bars, right? So wide ranges and a pickup in volume. Almost always we see that. Not ranges. So we're looking for that, and that's what we get here. And I know it's not big volume, but it's because it's occurring in the overnight, but you still see the buying coming in the volume. It's that it has to have that volume to drive it. And then when it comes back, we don't quite get testing volume in here, but it's testing nevertheless. In fact, it looks like on this hourly, there might even have been a small hourly spring. So David says that the hourly bar shows one of the best strategies for trading the S&P. So yeah, I would agree that it is one of the better strategies for that. You're looking for the momentum, as we have in here, new signs of momentum, right? Here we're coming down, and then suddenly we get momentum up. Volume comes up into the upside, the price bars increase their range and spread to the upside. So now we're looking for an opportunity to go long, and we take those opportunities on pullback. We don't want to buy up in here. Sometimes we will, but generally 95% of the time, I would say we don't. Maybe even 99% of the time we don't. 95% of the time we're looking to buy somewhere here on the test as the market comes back. Up in here, you can see here there was a small, if you were trading at this hour of the night, there's a small hourly upthrust in here. So you got twin sisters, upthrust here and an upthrust here, which is actually a test of the upthrust. All right? And it's occurring in the new momentum, vertical acceleration, new volume, wide-ranging spreads down. And it's showing you that it doesn't have the power to continue to go up by the narrow ranges and the less volume compared to what we had before. So hopefully that helps. Could you use a 20,000 tick chart as well for this strategy? Yeah, you could. I used to use let's see. How did I do this? I did it, I think, in threes. So 3,000 tick chart has been the standard of mine for a long time, for years. We started off with, I think, 1,000 tick charts, and it grew to 3,000. It's been pretty stable there. You can go up to 4 or 5 if you want, especially on a really active day. But I actually like the 3,000. That works best. So now you can play this up a 9,000. So this would be like a 3 to 5 minute chart. Okay, the faster the day, the smaller the time frame. The more active it is, the smaller the time frame. So you go to a 9,000 tick chart. That's more or less like a 10 to 15 minute chart. And then what do we do next? Was it a 45,000 or a 27,000? Was like an hour. And then I think I jumped up to, I think the TradeStation only goes up to 50,000 or 55,000 ticks. So I think I just doubled this and did like 46,000 or 50,000 for the biggest of the time frames, but didn't really look at that too much. And the 27,000 was like 45 minutes to an hour, depending on the day. So yeah, you could do that. You certainly could do that using various tick charts. And then you would use the Weiss wave. I would bump up the, maybe a 1, I'd probably keep it at 3/4 and then bump it up to a 1 point, or maybe 1.5 points up in here with the larger. Okay, some questions here. I use the fib sequence numbers on the tick charts, 610, 285, and so on. Yeah, you can do that. I'm not sure what that does for you, but you can certainly do that. Peter, you'll find that what I like to do is keep things simple. And so I don't even use the doubled up tick charts anymore. I'm just, just using hourly charts and 15-minute charts during the day. That helps understand what Weiss was showing. Good, Bob. I'm glad that helps. A buying climax at the end of the trend shouldn't be confused with new momentum. Oh yeah, as is usually occurring at the end of the trend. That's a good point. We're looking for this to start. The vertical acceleration is a start of trend. If you see it come in at the end, so for example, you might see a downtrend, right? It's coming down nicely like this. And then suddenly it just plummets like this. Well, this is not vertical acceleration. That's not vertical acceleration. If we were, like this, and then we get this, that's vertical acceleration, okay? That's what we want. Now we wait for a small retracement, maybe back to here, maybe not. And then we anticipate, just like new momentum, we anticipate the vertical acceleration will continue. We'll have follow through and push above the last little swing high or low, depending on what it is. So don't get confused. This would be a selling climax. And if we were, going up, if we were coming up and then the market goes straight up, that's also not a vertical acceleration area. No, that would be a buying climax, most likely. And volume is going to expand with this. Volume is going to expand over here on these climactic actions. But if you've been in a trend for a while and suddenly it goes basically parabolic, either to the downside or to the upside, parabolic just meaning straight up or straight down. A nice typical trend, if you were to put an X and Y axis on it, you would see it's about 45 degrees, right? It's about a 45-degree angle. Same thing here. You would see roughly a 45-degree angle. But then this goes almost 90 degrees, right? Almost doubles this angle. And that's just getting way oversold if it's coming to the downside, or way overbought. So yeah, you don't want to think about vertical acceleration at the end of a trend. Very good point, Dean. Thanks for saying that. Yeah, we have the tendency to turn simple into complex. We certainly do. And yeah, that's a thing about trading is we don't want to get too complex about it. Try to find the obvious stuff. That's usually what works the best when things are obvious to us, right? Um, and we want to build on things too. I'll talk a little bit more about that a little bit tonight, but we're coming into a vertical acceleration area. We've got potential climactic volume on the Weiss wave here. Then we get shortening of the thrust, right? And we pick up here, and now we're holding gains in here and holding this support. And we get the vertical acceleration, which is strength coming into the market, right? This is the climactic action, a small buying climax is strength. Shortening of the thrust means no more follow through to the downside, and buyers are stepping in here, and that's bullish. Holding support is bullish. New momentum, vertical acceleration is bullish. And then we're looking for a weak pullback, and that also would be bullish. So we're trying to line all this stuff up. It's not just coming in here and saying, "Oh, vertical acceleration, let's go short." No, we have inability to follow through to the upside. We have an up thrust in here, right? And then we get the vertical acceleration. Volume comes into the downside. That's supply coming in. That's selling. And then we look for the weak rally. Same thing here. We get the vertical acceleration up in here. Now we're looking for the weak rally, and we come back in and we find it on top of support, which was actually resistance earlier. All resistance in here. Now that we break through, that's going to turn into support, and that's what we look for. So it's not just one thing. We don't want to oversimplify it, right? We don't want to make it so simple that we're now kind of trading dumb. We don't want to do that. But we don't want to overly complicate it. We had a parabolic move on the S&Ps today right at the open, and then later before the market closed. Yeah, they happen all the time. They're a very common thing. And so that's a good thing to notice. When you see vertical acceleration, that gives you direction, right? Check to make sure you've got good volume coming in. Also rule out that you're coming in at the end of a trend. You really want this right at the very beginning of a trend or close to the beginning of a trend. And then you can look to take a trade in the direction of that momentum or that acceleration. All right, good. Hopefully that was helpful. Let's take a look at the cable tonight. Oh yeah, we're cooking with the British pound here, aren't we? We had gotten a couple of weeks ago, actually last month, I guess it was, finally a spring down here. It finally came down and tested. It's one of the reasons why I use this kind of continuation chart that preserves the contract highs and lows, and then doesn't back adjust them. On a regular, like if you didn't have any of this here, right? If you didn't have any of this other stuff in here, and you just use this, which is the common continuation chart in TradeStation, it would back adjust all your prior contracts that make up the continuation contract. It would back adjust it into the current level of price. And that affects everything back in here. The patterns are still the same, but the price points are no longer the same. So this preserves the actual price points and the actual price points, and that's a benefit to us. So that's why I use this. One of the reasons why I use it. So we had that spring, and now we need it to break above this downtrend line, which we think it will do. But as we watch this, we see you got a little bit of vertical acceleration here on the weekly. That's a good sign. It's not great vertical acceleration, but it's not bad, and the volume is picking up to the upside, right, as we go up into the vertical here over 2 weeks. And so that gets picked up by, that's this here. And you can see that there are indeed quite a number of vertical price bars in here. And the volume is pretty good. It's sustained on the way up. So this is like a vertical acceleration area. We were looking, last week, I think we were talking about this. We were looking for this to hold in here. It looked like it wanted to, but it didn't. It came down. It surprised us a little bit. So here's buying in here, certainly in these two bars, right? We have good solid buying, clustering of closes on the upside, but that didn't hold. It came down. And notice here on these two bars, here, these two bars show good buying. These two bars show inability to go lower, or what I am starting to refer to as very poor downflow. You can call it poor ease of movement to the downside. Doesn't really matter, but you got 2 days stopping in the same spot here. What's up with that, right? And this one gets a little bit less volume. And then the next day, bang. And they're trying to close back up underneath this low. I don't know if this one did or not. But in any event, poor downflow leads to this vertical acceleration, right? So now we have a daily vertical acceleration. We can check the volume. Boy, that looks good. This is new momentum. So, you could just almost buy this blindly right here if you want to. I mean, there's such strength behind this. But what I'm looking for here is maybe it would come back to around 24.25 area in here, like in here somewhere. Just a little bit deeper, come in a little bit more. It may not do that. This is just for tomorrow or the overnight. If it comes down into this area, I'd be looking for the small, narrow price range, the light volume, and then the market starting to turn up, and I'd be looking to buy on that turn. What I'm looking for it to do, first target is up in here. I don't know what this is. We'll take a look at that in a minute. First target is up around the 26, I think 26.25 is what this is. I can check it quickly. Yeah, 26.25, 26.24. So 26.25, maybe a little bit higher than that. But this isn't, most likely it's not going to stop here at 26. It's most likely going to find legs and start moving. It's going to have this is also the area where the monthly trend line is. So I would expect a little back and forth in here, right? But eventually to push through. And then when it does, I'm looking for it to go up into the 128 area, okay? Maybe a little higher than that, 128.25, but that's what I'm looking for here. So you can see we've got nice shortening of the thrust. We have inability to go lower here. On last week, we came underneath last week. This is where the poor downflow occurred. That shut us up. And so now we're looking to, you can, as I say, you can basically buy this blind. And I think you'd probably be okay, but hopefully we'll get a little bit of a pullback down to around 24.25, 24. Yeah, somewhere in here. 20, yeah. Back into this line over here. And this should be up here. Yeah. So that's the blue line is really our target, back up to around 128. And then we'll see what happens from there. If that does occur, if we get up above and get into 128 area, and it may take a while. Now we've broken the downtrend line, assuming we get good acceleration to the upside. And then, we're off to the races. We're up at least to 3,500, 34, whatever this is up in here, 3,400. And that's a nice move on this market. Any questions on that? Oh, there are some questions. Would you have bought on the last of those two down bars? No, I'd be waiting. I'd be looking at this. Well, this is what I did. I looked at it intraday and I took it as it came came up and through here. No, this is just this is not something to buy, but it's something to see and then say, okay, how come it's not going 2 days in a row and it's not going down and we have buying in here? I'm going to be set for, okay, if it breaks to the downside, then obviously we're going to try to come back down into the 1.2 level, 200 level, 2000 level, whatever. And so I'd be prepared for that. If it did break to the downside, then I'd be if we started to come down, then I'd be looking for a little pullback to get short, because then you've got the target is here. But here, we get long, and now the target's going to be up in here. But just buying this, that's kind of hard to do, I think. I think that's really hard to, buy this on the close. Yeah, I'd find that kind of hard to do, because what is this? This was Tuesday, so this was Monday. Why is this not looking correct? Hang on a second. That's the 7th, 8th, and 9th. Oh, that's right. That's this week. I've gotten confused. We're Thursday. I'm thinking this is Monday. That can't be right, I'm saying to myself. Yeah, no. You don't want to just buy this outright. You want to see it unfold and confirm. On the S&Ps, we have shortening of the thrust and signs of weakness, a massive upthrust through 3 levels of resistance at 2-day high. Yesterday high. What are you talking about? The S&Ps. We're not there yet. Can you save can you save this question until we get to the S&Ps? Is that all right with you, Peter? Because otherwise I have to open up a chart, and I don't want to do that right now. Okay, any other questions on the pound? Then let's get to deep practice. So here's a daily chart. See what you think about this. Focus mainly on the last, we don't need to go through, you don't need to do a detailed analysis of this. Just focus on this here. Are we looking to be buyers or sellers tomorrow, do you think? And what are the key levels that we want to pay attention to? I'll give you a few moments for that. You want to be buyers, Danica. Good for you. So you want to be a buyer, says Peter. We want the key levels would be halfway back, and yesterday's high and low. Yeah, you've got quite a range here, right? Just looking at this widespread bar, you're from almost 1950 down to almost 1800. So you got over 100 points in this daily range here. That's a lot. For the S&Ps, it's a lot in general. Halfway back, we would take it, I think, from here to here. And you could also do it from here to here. I'm not sure. I think this would be the proper way to do it. Let me erase this. Yeah, this is, so we would take halfway back from here. Just eyeballing it, it's going to be about here. So that would be one area you would watch if we did go up to the upside and this thing really screamed up. That would, somewhere up in here would be likely where it would die, right? The rally, I'm saying. Oh, halfway back of this bar. Well, you've already gone halfway back, right? You're talking about halfway back of the wide range bar here, the big bar. We've already gone halfway back up, right? The middle of that bar is approximately here. We've already gone through that. Yeah, so typically what we do is we look for halfway back would be the actual move itself. But sometimes we apply it to price bars too. Let me just hang on a sec. Brian says a lot of cause built, then it falls out of bed, straight down into a clear climax. Rally next day takes out a lot of the range of the selling climax bar. Yep. And although it closes poorly, it still manages to hold above the second to last close, second to last day's close, and on decent volume. So the buyers are now in control. I'd anticipate a test tomorrow somewhere towards the second day low, and look for a long targeting the daily high or the 2-day high. Very good, Brian. Yeah, very good, very good. Dean says, I think there's more downside to come. Oh, hang on. Eventually, but I'm looking to buy two due to the last bar's close not being able to close below yesterday's close. Good. The last day's volume is relatively strong, but supply was not able to push lower. Yeah. So it's like effort to go down. This is not really effort to go down, but they did make an effort to go down, right? It's not the classic, but they tried to bring it down and they couldn't close it lower than yesterday's close. So for all that effort, they did nothing more than what they did yesterday. So expecting a positive test lower at 1-day low or just below, and then look for a long. Yeah, we'd be looking for a long down in here somewhere, either below yesterday's low or maybe even the 2-day low. Peter says, I usually mark the high and low of the wide range high volume bars. Yeah, it's a good practice, Peter. Very good practice. Looks like too far, too fast, says Dwayne. Would look for a long entry. Also, large players at the lows, so again, would look for a reason to go long. Could be a shakeout. Probably not a shakeout, but that's okay. Bob says, didn't it already make an attempt to go higher and fail, then look to keep going down, closing at the bottom of the bar? It did look to go higher, and it does close at the bottom of its bar, and in isolation, this is negative. When we put it in context, it's an inside bar, somewhat less volume, and it's closing level. I would call this a level bar, but it's trying to go down, and it's not drawing out the supply necessary, and it couldn't draw out sufficient selling to be able to push it down to the bottom and go through. And Peter did make a good point before. On a widespread bar like this, if it goes up over the halfway point, then there's bullishness coming into the market, right? We don't anticipate this to go really far up, right? But it does. It goes almost all the way to the top. It's got maybe another 15% to go here, right? Give or take. But it kind of went all the way up, 85% all the way up. So somebody stepped in and bought there. Somebody was buying in there. There was enough to push it up that way. So this is not really bearish, and then it doesn't close all the way down. So you got lighter volume, a poor close for the sellers or a good close for the buyers, meaning that it didn't go lower and it's holding in here. It's an inside bar, meaning that the market was coiling during the intraday, trying to find its bottom, or it's trying to find a range, trying to digest this move is what it's trying to do. But the penetration of this bar and the poor close for the sellers suggest buyers have stepped into the market. Okay, and that's what we're all about here, is looking at these price bars and trying to figure out, is buying going on or is it all selling, right? You'd have to say at the end of this day, boy, it's all selling. Look at that. It was all selling on this day. It didn't even rally, it all selling. And then look at this, all selling, right? But then look at the rally all the way back up again. So there's only one way that thing can rally, that this market can rally, and that's that buyers who are bullish on the market are stepping in at this point. Not bullish necessarily on the overall market, but at that moment in time, they were bullish. We broke out of a long sideways trading range, says Ted T, and with wide spreads and increasing volume. However, the 2-day bar looks climactic on very high volume, with some buying coming in with a close off of the low. Next bar rallies but closes weak. However, it makes no further downside progress. Similar to the, yeah, exactly, similar to the pound that we were just looking at. And it's doing so on less volume. Selling pressure may be declining, a test of yesterday's low or a potentially 2-day low, and a reversal test to yesterday's midpoint or high. Yeah, good. That's good, Ted. Very good. So yeah, let me just give you this sense here. This is a big, as Brian said, it's a lot of cause here. And when it breaks from a long sideways line like this, remember last time we met, we were talking about, usually after a trend day, then typically we'll have some back and forth. We'll get a consolidation day. And so you look for spiky turns, or if it goes down lower, you're looking to buy. But not in this situation. Not when you have all of this cause and it breaks down and through. You get this 2 or 3 days, 4 days of downside. In fact, we have 5 down days in a row, which is not unusual, but it's not unusual, but it's getting long in the tooth. In other words, this trend is getting long. There's been no relief rally in this whole thing, in this whole move, these whole 5 days down, and it needs one. It's just overbought down in here. So you have these are just lovely trades when these occur like this. You get all this sideways action, and then the market breaks and it goes quite a bit, but it gets overcooked. And so, it's overbought down here, and we know that by the spread, the high volume, and by the close off of the low. It's not closing down here anymore, right? It's closing off of the low. So you can see the volume expands to the downside. This is picture perfect. You've got a small little, I think it's probably an up thrust in here, but on narrow range, it doesn't do much. Then we start going down, it clears the bottom here, closes. We come back up, test that the next day. You see this? This is like a line here all the way across for 3 or 4 days on this week. And then the market goes and breaks down, but can't get back up above it. There's your short opportunity. Bang, it goes through. Same thing here, exact same thing as this, except now it's on a bigger, much bigger context. This small context, huge context. Same thing, bang, and it pushes down and down. So, but we get buying off of the bottom, as I talked about earlier. We get on bar 6, we get buying coming in. So yesterday's high at 1926 and a quarter, yesterday's low at 1837 and three quarters, and then the 2-day low, 1808. That might be a little bit of a move here, 30 some odd points down to get to under here. It may or may not. We'll have to see. All right, so let's get into it. Oh, question here first. If we don't see strength above the halfway point of the big bar, probably price won't break its high, so we can only go down, or vice versa. Yeah, you would notice that and see how the market's trading through there. On a 5-minute chart, it will likely pull back a little bit, but how did it look going in? Did we get strong price bars going in? This is a 5-minute chart now. So this is the halfway point here. Halfway point right here on this line. So is it coming in with strength? And then we start to see this. So that's where we look as we come back into, and of course there would be volume on this, right, coming up. And there would be low, ideally there would be low volume over here. This is where we look to make that play. So if you got good strong coming up, it's probably gonna, it comes into the halfway point here, but it's probably gonna have a couple of bars, might pull back a little bit. And if it does, then we look for that little setup, and we look for it to continue to and break through that halfway point and continue to the upside. But it's going to depend. You really want a good trend going into this, or a good ease of movement, good solid upflow going in, firm closes, wider spreads. Doesn't mean that every bar has to be a firm close, right? But wider spreads are important. Peter, start putting some of this stuff together, right? About how price action works, key areas of support and resistance, and you begin to see in advance whether the price is actually going to go through it or not. Oh, I put the 20-minute chart. Because we're starting to run out of time, let me just go through this. This is just the last piece here in the 20-minute, the 4-hour chart. You can see the buying that came in. In fact, there wasn't that much volume to the downside on the 4-hour chart. We get a little more volume in here. Good volume comes down on the last bar of the day, but this is effort to go down and really no result. It holds in here. We push up, not great volume coming up. A lot of this is in the overnight, and then we get narrow range in here. See what I'm talking about? We were just talking about this. Let's say that this, Peter, is your halfway point. So we're coming in, we get one good bar in here, but look at what happens. These two bars are negative, so we know it's going to come down. This is holding in here, okay? Had we started out, let me see if I can do this differently. Let's say, for example, this was the halfway point for this day coming down, right? No, that doesn't make sense. Forget that, sorry. Yeah. Well, let me try to explain what I was about to say. Let's assume that this is the halfway point. We were coming up and now we're coming down, but look at what happens. Here, volume is expanding to the downside, right? We're getting ease of movement down. We're getting that, and now we get nothing over here. So this is different than this. We're not getting any rally off of this, right? As opposed to we come up to this and then find weakness. Here we come in, we see strength coming into the downside and then no rally, right? That means continuation to the downside. Here we have we have a weak rally coming in, and that suggests that that halfway point or whatever resistance is here is going to hold. Hopefully that makes sense. Maybe I did that a little bit too much, but hopefully that makes sense that it's going to hold. Anyway, we come down here on 5 and look, we don't draw out the volume. All right, we come back into where 3 was yesterday's low, yesterday closed on the heavier volume of effort versus result, and now we come in on lighter volume, even though it's a poor close. So really, we're looking for an opportunity to get long somewhere in here, and we want to see it break that 4-hour mark, that 4-hour line. Okay, yeah, okay, good. All right. Oh, next week, I'm going to go on vacation. I'm going to take a week up in New Hampshire. So next week, we have 5 weeks in October. We had a session last week on the 3rd, this week on the 10th. Next week is the 17th. We won't have a session then, but we'll have one the following week, which is the 24th. And the week after that, which is the 31st, so Halloween night, we'll be doing deep practice, and we'll have our 4 sessions in for October. But next week, we're going to be off. And Helen, I think, sends out an email for that to remind everybody. But we'll be off next week, and we'll pick back up again the following week on the 24th. All right, so here's where we were on the, that didn't come in yet, isn't that funny? On the daily, no different there, you can see it, okay? This is gonna expand in a minute as soon as for some reason it didn't adjust to today. So this is actually, here is where that ended yesterday, right here. And then we came underneath and then pushed on up a little bit here, okay? So just from the hourly chart at this point, this bar, this is only halfway through. We're not all the way through, but you can see that we're starting to come down here on the 5-minute chart, right? So what is this telling you about the supply in here, do you think? What is this hourly rally telling you about this vertical acceleration area? This is vertical acceleration, right? And now what is this rally telling you about this? Is this vertical acceleration still strong, or is it weak, do you think? Weak meaning we're gonna continue to go higher and break. Well, here we go. Choppy upwave, still weakness in the background, yeah, and some shortening of the thrust, yeah. So we start with good vertical acceleration here, or good upflow in here, volume starts to pick up, right? Notice as we come down, volume is picking up to the downside. Then we get poor close. How come we didn't close up here and then the next bar do this and this? How come? Why is that? Why is it closing here? And we try to go up again and we're having trouble, and you can see that there's shortening of the thrust. We're not making, from this last swing high, we go up to here, and then we only go to here, and then only to here. So we're struggling going up. So it suggests that this is still pretty strong, okay? This is what we want to be able to see. So I marked off, here's where we are. So you can see it's kind of crazy, right? Here we got, this is this day here, the bottom here. So we see the volume coming in on the hourly, it rallies up. Small volume comes in, it stops in here, we push up again. And you can see, here we are hitting yesterday's high. Here's yesterday's high. Here we are in 2-day high. So this is yesterday. you can see this is not holding in here. This is holding. It's not going through. There's no follow through. Every time it comes up, it closes down. Comes up here, closes down. Comes up, closes down. Comes up, closes down. There's only one price bar that closes firm, and it can't sustain itself. And it's happening at yesterday's high. Short this in here, anywhere in here. That's what that's telling you. Okay, that's what we're trying. So this is David's kind of idea with the vertical acceleration, and then I'm trying to show you how to apply the analysis of the price bars as we go into it, and we can get a heads up here because we're not even trading this yet, and we already know that we want to look for a short somewhere. And, shorts we look for up high. So now let's take a look at here's some comments here. Hourly tells us that the supply has been used up. It's eating into the vertical acceleration. It is doing that, but you have to look at how it's doing it. It's not doing it very well here. But weak, Dean says weak due to the poor quality of the demand. Good. Ted says trend looks choppy to me. It sure does. And Peter says it's going up, but it's going up with difficulty. Yes, that's what you want to see, Peter. That's exactly what you want to see. I notice that when the bars are pumping up and down with that swell in volume, it's usually a prelude of a reversal. Yep, exactly right. Exactly right. All right, let's take a look at the 5-minute chart. I'm going to crunch this a little bit just so we can see it all. But here we are at the bottom. This is yesterday's low in here. So we dipped underneath of it, rallied up. Looks very similar to the British pound, doesn't it? In here, pushed up. Hit supply. You see the supply in here, even though I don't know what's over here. Well, we're in the vertical acceleration area, but you can see the supply. It's obvious if you look, right? And then we come up in here. So the first thing that I notice, well, let me ask you all, what do you notice about this? What do you notice about the 5-minute chart? Shortening the thrust in the waves, right? Rallies can't hit the supply line. Yeah, so we're getting some shortening of the thrust. And when we get that, you can do this kind of a trend line in here if you want. It's called a reverse use of trend line. I usually put it in a dashed kind of a way. Up waves are getting smaller. Yeah. Notice that the wave here, we do this a lot. Let me just do it. I'll do it. I'll do it quickly. So I'll just eyeball these. This is a down wave, down wave, down wave, right? Up wave, got longer, up wave, up wave. So we can see that nice length here. It starts out short, this grows, that's typical. Now they're getting smaller. They're not keeping up with this, okay? And when the waves get smaller to the upside, what we're looking for now is larger waves to the downside. And a larger wave to the downside would be what? It would look something like this. A push down. It would start to break these lows down in here. Maybe not get all, maybe come down to here or somewhere down here. But it would break the downtrend channel or the uptrend channel, excuse me, and it would break lows. Last swing low. And then this would bring out volume. and it would be a sign of weakness. And we would look for an opportunity, maybe coming back up in here to short, right? Or I'm sorry, up in here, excuse me, up in here to short. Make sense to everybody? Yeah, and the last wave has some effort versus result and overlapping price bars, and the angle of ascent is declined a little bit. Yep, exactly. Ted says fair amount of volume on that last upwave, but no progress. Effort versus reward there. You got it. And also, and Dean sees it as well. Yep, good. Everybody caught that. Excellent. Good. This is also a fairly long trend, right? We've been going on and on for, I don't know, couple, 3 hours here, and then another 7 hours here. Is that right? No, it's more than that. 7 from here, and then almost 14 hours we've been going up. So that's a lot intraday. So yeah, 12 hours, thanks. I was never very good with math, which is not good if you want to be a trader. But yeah, let's get this trend line in here and let's get, okay, so let's see where we are. So, but notice too that we have this horizontal line here and this diagonal line here as well. So we clear this. This is pre-market now in the S&Ps. That's the end of that 5-minute bar. What's the flow like here? This is the end of this 5-minute bar. No supply. Yeah, let's go long. Good. Yeah, buy it, says Brian. Absolutely. Now we bought this around, what was the price here? The low is 80. Okay, 82. Right? Is that right? Was that the close? Yeah, 82. And we're already up almost to 90. Oh, I'm sorry, 86. Yeah, so now we've got, Brian says out. Okay. So there's a good 10, 12 points in this trade already, right? Out at the reverse use of trend line. So they would cover in here. Goes a little higher, which is fine. And Peter would be out and Brian is out. So now I'd be looking at this and thinking, okay, it's got a hold in here somewhere. It's trying to. So let's say at the 9 o'clock bar, let's say we buy this here. Vertical acceleration, light volume, narrow range, sitting on top of the resistance. That looks good to me. Not good here, right? Well, and we're out. We got stopped out. And reverse, yes, reverse here. There we go. Now we are kind of coming in right at this, and we're looking for this to break, and we'll see if it does. We want to be nimble here. Looks climactic rather than a vertical acceleration area. You could be right about that. We're trying to hold in here, still short. Dean says, let's short now, okay. $9:30 in the morning, the open of the US. So let's pause here for a second. Let me adjust these charts. Now, we get a large volume coming in, but it's likely not climactic because it's just coming in at the US Open. Although it's a pretty large volume for that 5-minute wave, so we might see some sideways or what have you. Oh, I didn't, you know what I didn't do? I know why this isn't working. I didn't add the day back. All right, we're not going to see the daily, sorry. But we have yesterday's low and high, so that's fine. We can see it. The daily's not moving. I didn't include this day's price in this chart, which you have to do when you do this. I forgot to do that. Sorry about that. So typical volatility coming in the morning, the first half an hour or so. We're seeing that occur here. And we do have this low here, but I wouldn't be thinking too hard about it. It may cause us to go sideways a little bit, but I wouldn't really think too hard about it because look at the hourly and look at the volume coming in on the hourly. This isn't going to hold. This thing in here, that's what this is, right? This is right here. That's most likely not going to hold. May try to initially, but how do you like that bar? Yeah, Ted says short that. And Brian says add to your shorts. Yeah, this is very good in here. So this, I mean, you can pick your lines in here. I mean, let me clear some of this out first of all, so that we can see what we've got here. So you can kind of peg it against this here or against this. But again, notice it's the vertical acceleration here. And we're looking for weak rally into it. That's a picture perfect weak rally. And that's a short. Yeah, that's a short, Ted. And so it does take that low out, right? New momentum down. That's right. New momentum. And we can put a trend line in here, I think. That may not help us. What do you think of that bar? Now, by the way, it's 10:30 in the morning here. Yeah, minor climax. You can sell it in here. Yeah, so you'd be selling as this is coming down. Minor climax because of the high volume that comes in on the Weiss wave. Well, I can adjust this. Don't really want to, but I can. That bar made me nervous. Yeah, this is typical. But what we want to pay attention to the higher time frame. There's no demand coming in here, right? The demand up was fairly weak because of the choppiness. It started out okay, but then got choppy in here. The volume's coming in, and it's coming into the downside. It's suggesting that this wants to go down, down in here somewhere. So bars like that, we can, as long as we got a decent, we want to try to hold these, but these are sometimes hard to do. But we do want to try to hold them. It looks like, it seems like there's buying coming in here, right? Lower highs, lower lows, and lower closes, said Dean. Yeah, exactly right. If price breaks the low of the initial balance now, good confirmation of continuation to the downside. Possibly, yeah, possibly. But it's 11 o'clock. We've got another hour into the morning here. And so far, this is a down day, but it's choppy. You've got to be very patient with this. And it's a hard one it's really hard to trade in this because you're thinking, okay, maybe I should go long in here. That's 11:30. This is all, if this was buying here, if this was all buying in here, you wouldn't see this. This is a short here. This should take off to the upside. You've had plenty of opportunity. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So you've got 45 minutes, no, not 40. Yeah, about 45 minutes of going sideways here, doing nothing. Yeah, so we would add there. And you have this line, this trend line, if we start closing above it, not right above it, but well, decently above it, then we get out. That's our stop. You can think about it that way. If this were to, trying to figure out what I'm doing with this mouse here. I just lost train of thought. Oh yeah. So let's say that we did start moving up and this bar goes up like this and closes here. This trend line's down here, right? And it closes up here. Well, that's time to get out. That tells us time to exit this if we haven't already. So we're breaking down below here. Just broke the initial balance. Yeah, we don't think in those terms, but I understand what you're saying. Are you using the first hour of the day as initial balance, or are you using more? Yeah, okay. Yeah, the first hourly range. So that's the end of that bar. What do you think here? Ted says short again. Brian says out. Okay, we will do that. Let's see what happens. Ted, you are committed. A potential 2-bar reversal, so a rally of some sort. Not really. It's too much. Technically, yeah, there's a 2-bar reversal, so you're going to get a little bit of a rally, but I wouldn't expect a big rally off of this. Because of the negativity here. I would prefer to see us hit a, like here we've got, maybe this is going to be a spring. This is a little bit better. Yeah, for this. It's having trouble rallying away here. Let's see if it'll rally now. So this is hugging the lows. We have a spring situation here, but we're not moving off of the spring. We can adjust this trend line a little bit better, make it a little cleaner, I think. Yeah, something like this. So this close wouldn't bother me. A close up a little bit higher would be a problem, right? So now this should break hard, right? What do you see here? Shortening of the thrust in spades, says Brian. Yeah, right in here. You can use the reverse use of trend line. And you can see that unfolding here, right? The hourly low, let's go back, see if we can find that. And Whoops. I'll get that right. Yeah. So will it push over that? You can buy, happening on hourly access line at 1800. Yep. Yeah, and it is. That's a good point. There is an access line here. All right. And we usually like to put those in purple so we know what we've got here and we can make it a little bit larger. Yeah, access line here. So on the 5 minute, we can buy this here or wait for it to go over, go over this line here. That's this line. Cluster of closes. I'm in, says Dean, shortening of the thrust in space. Yeah, so let's go through this a little bit here so that everybody's on board. Whoops, sorry. So a couple of things here. If this trend were operating normally between this trend line and its parallel, we should be coming all the way down. We can come back up and we should be coming all the way down. That's how this, that would be a good trend. But we're not getting that, are we? We're not getting this all the way down. What's happening? What's happening is, I'll erase this. Somehow price is stopping before it gets all the way down to the demand line. This is the demand line. This is the supply line. Okay, that's how we term the terms we use. There's only two ways that this can happen. Either buyers are coming in earlier than anticipated, or there's no supply. Right? There's not enough supply to bring it down. Buyers are either coming in earlier than anticipated, or there's no supply sufficient to bring it down. You can see that actually both are probably occurring. It really doesn't matter which is occurring as long as you recognize this. And the recognition is that it's having real difficulty going down. All right. Trying to get that. Okay, so there's that purple line over here. I'll just leave it as blue. Oh, sorry, that didn't. So now you can, so you could either buy this or you can buy this for sure. What do you notice right off the bat here? What do you see right off the bat? Ease of movement up, yep. And what else? We've got 3 5-minute bars here with volume. Yeah, Brian says ease of movement up with volume. Yeah, and volume's increasing. We haven't seen that really. Well, we saw it a little bit over here, but let's see if this will pan out for us. First thing we need to do is break this swing high, this little swing high right here. And we're doing it, right? Well, we're caught there, okay? But notice the volume. Notice the ease of movement going up. But we are in, if you look back in here, there's a lot of congestion in here, this area. So traders will be trapped in that area. They'll be looking to get out. They'll cause some pressure to the downside. But let's see what happens now as we come back down. The line in the sand, I guess, would be this line here, right? We don't really want to see it close below that. So look at this. What do you think? What do you think of this? Go long, right? Poor downflow. Yeah, these are all down bars, but they're all just hanging right here. After 15 minutes, we couldn't go lower. This is a buy. Only because of this and this. We've got demand coming in. This is demand overcoming supply. You've got the hourly turning for us. as well, and then a weak pullback. No downside progress. That's right. Can't go down, so we can take a long. Yeah, because the sellers will see that, the buyers will see that immediately and jump right in and look at the ease of movement. This is what we're looking for. Now you know you've got a fish on the line, so to speak, right? Now you know you've got something, so hang on to it. This is what we're looking for. We're looking for this kind of price action and increasing volume. That tells us buyers are pushing the market up and will continue to do it until they can't. And we'll see that when it happens, hopefully. And you can see that we're holding here as well. Good movement up. But what happened to the volume, right? So what's your sense here? What's this market trying to do? Would you think? Some shortening of thrust on declining volume. Yeah, so what's that going to do to the upside? Think it will pull back, but continue higher after a test. Yeah, because look at your hourly. You got good movement on the last hour. That's this up in here. Good sustained volume coming in. So we want to, you can either take some of your trade off, if you got in here, I don't know, where'd you get in? Some people, let's say we got in at 58. Well, geez, you're 20 points higher. I mean, you could be done for the day if you wanted to on that, right? So you might take a little bit off, but keep a little bit on. And then we're looking for what? We're looking for a move back into well, pick your poison. I'm going to go right in the middle here, right into here. All right, let's see what happens with it. That is clearly telling you that we're going to come down a little bit. Where are we going to come down to? Well, we would want to come back down to the top of old resistance, right? Which should be support. So we'll see. Brian says, shorting the thrust and declining volume, a reaction back to 65.70. I'd hold. Okay, good. So here we get that move down, right? And notice where it's stopping here. By the close. Yeah. So Ted says, let's just buy this right here. This would be a little bit of a shakeout, an ordinary shakeout. So that's 4 minutes into this bar. You could buy that, or you could buy this here. You could buy this bar. And you get a little more confirmation. But this is starting to hold here. I don't see a lot of supply coming in. And I've got good support. So we'll see what happens. Good vertical acceleration or ease of movement coming up with good solid volume. That means that this high in here is going to break. It may have a bar or two of sideways, but it suggests that when it's coming in like that and coming in like this, It's not going to, the resistance is not going to hold, not likely to hold. So there's that bar. What are we likely to be doing next here? All right, coming back into here, testing again. Can we draw an uptrend line? Yeah, we can. I'm not a real fan of them, but we can draw them. Ted says, let's go long. You go long here, Ted, I think, right? Yeah. And there's no supply. This is a good spot to go long here. We don't draw out any supply, narrow range. It's an inside bar, inside the range of the prior bar. Inside it's high and it's low. All right? No real pressure to go down. And it takes off to the upside again. Notice how we're coming through here and look at what it's doing to the hourly high, walking right through it. Maybe not. We'll see. Yeah. So now this trend line is not useful anymore because we're accelerating above it. Yeah, is that right? Is that the way I want to do? Oh, wait, hang on. Yeah, that might be a little better. Okay, that's pretty good. When you're drawing a trend line, for those of you who don't know, we pick, if we're drawing an uptrend, we start at the bottom. We want to draw the demand line first, right? So we would start here and peg it to here, then draw a parallel and peg it to the swing high in between these two lows. That's how you draw a proper trend line, normal use of trend line. Still good, solid vertical acceleration up. I don't see any climactic stuff in here. Could now be climactic action at the end of the trend. We get a little volume in here. I see it's coming down. I don't think that's climactic. Maybe. Yeah, I didn't think so. Target, yesterday's high, right? There it is. And this is the end of the day, actually. So here's where we would close our trade. We'd exit out. Why didn't I think it was climactic? Because I didn't see enough downside, I guess. And the other thing was yesterday's high was sitting out there. We were close enough to that. I felt like, we were going to go for it. I think it finally does get there in the aftermarket too. I forget. Here, we'll put 50 bars out there. Oh, that's the end. So that's the end of that day. It was just a push, yeah. So we started off with a crazy looking chart where most normal people would think, God, this is going to just bore a hole right through the ground and go to the other side of the world. But we noticed that an inside bar and lower volume and holding up there. From the overnight, we come back into the downside, the down move here, and we see that it was started off good, but got to be choppy. And what we're seeing in the choppiness, let me be clear about this. Look at that close. Look at this close. Look at this bar, just a inside, kind of inside these bars, not moving higher. Poor close here. All of that, this is good. This is what we're looking for right here. These kind of bars right here. We didn't get any of those here. We didn't get any of those on this leg up. All poor closes. So we anticipated a move down. We got that. We see the shortening of the thrust in spades here on the 5-minute chart. And that sets us up for a great rally into the afternoon. That just continues on up and almost goes back up to yesterday's high. That was its target. And that generally is the target. If you've touched the low and you've sprung it, so to speak, you've tested it and gone higher, then you're going to try to go for test the high. That's a general rule of thumb, useful rule of thumb. Yeah. Okay. So any questions on that before we get to the current markets? Sorry, I'm taking us over by 5 or 10 minutes. Yeah, sorry, Ted. I'm taking you over time. All right, let's get into the current markets then. Go to the S&Ps. I'll do these quickly because there's not a lot here. Kind of surprise move today. I still think I'm still going to I still think we've got negativity here. I'm going to say that could go a little higher, certainly, but I'm not buying into it yet. But I could be wrong. This is not a perfect thing here. So resistance here. Where's my text tool? Just a little higher here at 2970. And for tomorrow, come on, how come I'm not still in this? I should be remaining in drawing mode. Text. For tomorrow, if the market pulls back into about the 2920 area, which is roughly a little bit better than halfway on this, right? Look for, on the intraday, look for narrow range bars, light volume and stuff, and it should be support in here. Could come in a little bit higher, could come in on the high of this day here, which I think is 2933 or something, 2920, 31. I forget exactly what it is, but it could, somewhere in here is what you'd be looking for. Tomorrow only. I want to see this. I think this is an access line that goes across here. You can see it's this is the same line on the weekly chart. So it's a pretty significant line. It should hold here. I'm anticipating it comes up, kind of breaks this line, but then comes back down again. That may not happen, and it may continue to go higher. So if 2970 is broken, then we're heading on up, and I'm going to say for next week around 3010. We could go high, we could go all the way up to 3030, but I have a feeling that we're going to not hold in here, hold lower. If 2070 hold, we're eventually going to come back down, I think, to 2845 area, whatever this low is down here. So hold around 2920, maybe a little higher tomorrow morning in the early part of the U.S. Session, the morning part of the session. If that holds, that could be a good move. We should see some upside there. I'm looking for it to die out around 2970 today, tomorrow, the next day, or early next week. If that breaks, then we're most likely going to go up into this area here. But if that holds, then we're going to start making our way back down, and I'm looking for us to get down to 2845, give or take. Take a look at crude. Crude is interesting. Last week we were looking for it to, I forget, were we looking for it to hold around 62? Yeah, and it kind of dipped underneath that a little bit. Instead of that broke, then this would hold and find resistance around 54. We found the resistance. Obviously, we're going to try to go higher. Well, I'm assuming we're going to try to go higher here. And what I'm looking at is not anything different yet, really, from what we had. About 5650 in here as resistance, and then 4975 as support. That's crude oil, but you know, you've got on the weekly, you've got buying in here, buying here. I think that we're going to come, before we go up, maybe we may come down in here and do a spring. That's a strong possibility. It's either going to do that or you're going to start to see lows lift in here. But in any event, that's why we've got 49.75 still out here for the spring. If this thing springs, then we're off to the races and back. We're looking for a move back up above 65 here, 64, back above this swing high. And the last but not least, this was a little bit of a surprise. I did not expect this day to happen here. I was actually looking for higher prices, and it didn't happen. And that's okay. So for the rest here, 3110 would be resistance. 131.10. And that's just bringing this line across. Oh, I can't grab it. All right, I give up. Honestly, I give up. That's bringing this line across here. So we should be, any rally up in here should die pretty quickly. We do have a trend line coming up here. So we want to respect that. And so 130.20 would be first resistance. If that breaks, 129.20 would be the next level down, this low here. And that could break because we're getting some good acceleration down. So I'm not too sanguine about this, but we have to be aware of it, that it's there, and then come down to 29.20. All right, everybody. Thank you very much. Hope you're heading off somewhere nice. I'm going to New Hampshire. Yeah, going to do some hiking and stuff up there. All right, everybody. So just as a reminder, we're off next week. That's the 17th, I think. Yeah, the 17th. There's no session, but we'll pick up again on the 24th, the week after, and we'll get our 4 weeks in because there's the 31st is a Thursday night as well, so we'll do Halloween. All right, everybody, have a great weekend and a really good trading week next week, and I will see you in 2 weeks. Take care, everybody. Thanks a lot. Oh, can I just check on the S&Ps? Yeah, what was it you were looking at? I really don't like to do that. You know what I'm going to do, Peter? I'm going to add, because it's very late and everybody's trying to get out of here and people are leaving. So I'm going to ask you to do this. Send me an email and put a chart together, or just tell me the times, the exact times that you're talking about. Send me the chart or a good enough description, and we'll pick it up next week, and I will do it in detail. That'll be a member question, and that's generally the way I like to do them. Instead of, can you look at this market, can you look at this, or can you do that? Then we're all over the place. I don't have the chart set up, and it gets to be a little bit of a drag for everybody else. So I would ask you if you'd do that. Thanks. All right, everybody, have a great weekend and a good week next week, and I'll see you in 2 weeks. Take care, everybody. Bye-bye.